the mic working? Awesome. Well, good morning, everyone. I'm very glad that we can get immediately started with this panel. I think it's going to be one of the most interesting ones since we have seen that stablecoins are really on all front pages, but I hear the question over and over of what is the role of a bank within stablecoins. And that's indeed exactly what we are going to talk about within the next 60 minutes or so before we all head over lunch. I'm Chiara Munaretto, founding managing partner at Stablecoin Insider, a journal that focuses solely on stablecoins. So we really try to separate the conversation around anything else happening within the Web3 space and solely focusing on stablecoins. We already had a small introduction on our panelists, but I would be happy for you to briefly introduce yourself as well and maybe share one bit on what is your role on the stablecoin side. Please.
So hello everyone from my side, Bernhard from the Boston Consulting Group, 18 years with Boston Consulting Group, partner there, co-responsible globally for Web3. And my role with stablecoin, I put it that way, so I'm in crypto for BCG for 7-8 years already. Was wearing hoodies for, I would say, 6 years, and now I have to bring out my suits again because I have to go to banks again as clients. They're waking up and 80% of my clients are now banks again, or PSPs that enter the stablecoin market and that want to have a strategy.
Thank you.
Good morning, everyone. I am Filippo Chiricozzi. I'm from Banca Sella, within the team of DLT and digital asset. What we do as a bank, we have a strategy. We have actually a story of 150 years of innovation, and lately, in the last 4 years since I joined the company, we made sure to create this team that is more widely focused on DLT and digital assets. So working on different MVPs and POCs that span from custody down to digital identity, and of course stablecoin. It's an active part of the game. You may have heard about the stablecoin consortium that has been happening lately and is going to be launched in the next month. Yeah, for the bank, I oversee mostly the part of the communication and the overall strategy for the consortium itself. So glad to be here and discuss a little bit more about the topic.
Hi everyone, Jan Sell. I'm, I guess, like kind of bridging the gap between the old world, if you like, and the new. I spent a long time in London in traditional finance. Started off at Morgan Stanley, then spent some time setting up hedge funds before I got into the crypto space in 2018, and moved across to Berlin to work in on a number of different projects, including my last sort of 2.5 years as co-GM of Coinbase in Germany. Then in the last year or so, I've been working on a number of different projects as an advisor, and seeing more and more going on in the stablecoin space. And now also working with the stablecoin consortium as an advisor to help them get it off the ground.
Good morning, everybody. My name is Hribar. I'm part of group strategy of our RBI. I have been dealing with stablecoins now for the last 3 years. RBI was also part of the initial consortium of actually 4 banks that started this initial phase of exploring whether it makes sense to join forces and issue a stablecoin. Now we grew the consortium to 9 banks, and we're happy that we could announce this in September. And now, of course, looking forward to the next steps where things become more concrete.
Thank you very much for all the introduction. And I think I would like to start indeed with covering one of the biggest projects that you both have talked about. And luckily, we have both Banca Sella and Raiffeisen Bank here. They are actively involved within the consortium itself. So maybe, Filippo, I'll start with you. For whoever has not heard yet of this consortium to launch the MiCA-compliant stablecoin, can you briefly explain the initiative, very briefly, and also what is the premise that you're making?
Yeah, sure. So in a nutshell, as even Vid was mentioning, we made sure to be one of the 9 funding partners, so as Banca Sella, Raiffeisen Bank, and seven more, so to make sure to create the first stablecoin that can be a systemic one, euro-denominated, can be focused on, I would say, multiple MVPs, multiple projects that we can build on top of that. So from remittances to cross-border payments to whatever you may imagine. And of course, being MiCA-compliant, so compliant with the regulations. The idea behind being, I can talk, of course, about Banca Sella, but generally speaking, I think for all the 9 banks that are part of this consortium is making sure to create something that can be used on our everyday life, from B2C to B2B, so from the retail to the final, to every business, in the most compliant way, not only for payments on the European level, but even on the global side, for the ones that want to go outside of Europe, but even for the ones coming on the inside. We as Banca Sella, I mean, of course, as I was mentioning, being part of the DLT team, we were very happy to be on board from day one on this. And the idea behind that is leading the stage and being, of course, even as one of the first bank, hopefully one of the first bank on the Italian market that has been joining, actually, among the 9 funding partners. There was even another one that is UniCredit, and leading the stage and make sure even to create an environment in which some others, if they fancy joining, can help us build on top of the main promises that we started doing at the very beginning. The idea that we have, of course, I mentioned some things from custody to digital identity. We envision that stablecoins will be an active role not only for clients, of course, for the final clients that can be retail or a business, but at the same time they will need to use most likely a bank, and then of course we would be really happy to be one of them, helping them in the Italian market, because as you know, Banca Sella is mostly focused on the Italian market. So that's it on our side.
Thank you. And maybe Vid, you could expand a bit on how this initiative even came to place. So what kind of problems were you seeing from your clients, both from a retail and wholesale perspective?
Yeah, so as said, we started this initiative 3 years ago. Back then, we were 4 banks that had a question: does it make sense to join forces and issue a euro stablecoin? And we did a lot of assessments on the business side. So what are the use cases? What is the business case of this entity? On the tech side, so what would be the infrastructure that we would need to build, and who are the vendors that can help us with this? And a big focus was also on the legal risk regulatory requirements. As you know, MiCA came into force just a while ago. We were starting even before MiCA, but regulatory clarity is super important when banks want to enter this kind of space. So this started, the initial thoughts started already quite a while ago. And now in September, we announced that we established the entity. We're applying for the EMI license, and somewhere next year, we also want to go live with the issuance of a euro stablecoin. Now, this will be a separate entity that will, of course, serve the broader crypto ecosystem, so partnering with crypto exchanges, fintechs, PSPs. But the long-term vision is also to bring the banks a bit closer to the development of the actual ecosystem. So our goal here is really to build a trusted, regulated means of payment and settlement on-chain that will support the broader ecosystem. Because I think it's important also that banks are moving into this space, and it's easier for banks to move with, let's say, a separate entity than maybe themselves.
So in terms of the problems themselves, was it more like to test out stablecoins without, as you said as well, holding the risk of just one bank doing it? Or can you spot exactly what were the issues that you said, okay, we need to act this way?
So back then, and this was 3 years ago, and back then stablecoins were not as popular as they are now. Back then, we did have certain use cases in mind, and we saw that there are certain customer problems, but I couldn't say that any of our customers would come to the bank and ask for a stablecoin. Of course, customers are always asking for cheaper, faster, more transparent transactions, but nobody's really asking for a stablecoin. So we didn't build this on a single, let's say, customer problem or a use case, but more on this vision of where the future ecosystem could grow, what will we need, and what is actually also banks' role in this ecosystem. So we want to keep control, or we want to have a level of control also on this layer of stablecoins or money, as you can call it.
Thank you. And maybe Jan, on your side, since we're talking about 9 major banks, of course, every bank has their own way of working, even though at the core, every bank almost works the same way. How are the roles divided within the 9 banks? So issuance, distribution, how is that handled, if already made a decision around this?
Well, I mean, I guess the first thing is this is an independent entity that's set up with the banks as shareholders. So all of the roles will be basically operated from inside the issuer, but of course with the support of the shareholders where they can. So to some extent, in some ways, this entity has a certain amount of or far larger firepower than maybe a smaller fintech that's trying to do the same thing, because you have quite a broad range of shareholding banks that you can go back to for support on things like communications or distribution, which is really going to be I think a big part of whether or not this thing works out. I think a lot of the technical build is complicated, but it's process. A lot of the compliance build is complicated, but it's process. I think the real magic will be the distribution, and the distribution will have to encompass everyone in the market, like Bid was saying earlier. So there will be an element of distributing the coin to the crypto natives who are now using stable coins. I think there's a lot of demand for that in Europe, especially. There's a big degen population in Europe that are at the moment getting their yield on US dollar stable coins, but at the same time losing on the FX rate. They'd be very interested, I think, in a stable coin issued in euros. But I think the longer tail of this is really when we get the institutional involvement, which again is a lot more likely, I think, in a stable coin that has been kind of issued by an entity like this.
Thank you. And closing down this topic around the consortium itself, maybe Filippo or Vid, what is the minimal viable rollout that we're looking at? How that is going to look like? And are we aiming indeed at half 2026? And is that going to be through a test? Is it going to be fully rolled out? Tell us a little bit more.
Yeah, so as said, this is, as Jan already mentioned, this is going to be an independent entity, so we're not, let's say, limited to the usual processes that banks have when they're, let's say, developing products or processes. So from this perspective, we can definitely move faster. And we are now currently applying for the EMI license in the Netherlands, which should give us kind of the timeline that we should be live somewhere in summer next year.
Maybe I can add on top on the fact that, as it was mentioned before from Jan, it's important for us to make sure that even the consortium is independent, but at the same time being kind of a commercial partner, no? Because the consortium can benefit from the, let me say, firepower that we already have been building, no, in different countries on our hand. But it's even important for us because we want this to thrive, to become really the opportunity from degen and even from non-degen to actually start using a stable coin, euro-denominated in euro, that can, at the same time, can actually, if the digital euro will happen, will move in parallel with that one, given different opportunities, of course.
And Bernhard, on your side, more from a maybe outside-in perspective, how do you see this consortium fitting into the broader European strategy when it comes down also to CBDCs, digital euro, and so on?
Yeah. So honestly, I really have to say a big kudos to you guys, to Raiffeisen, and also to Sella and other banks that started 3 years ago. I mean, stablecoin 3 years ago, not even the crypto ecosystem, it was a big thing. I mean, back in the days, we were ending the NFT hype, maybe entering the real-world tokenization hype a little, digesting the DeFi summer, but stablecoins were not there. And they basically jumped on the topic 3 years ago from now, and all the other banks started, let's say, April this year, maybe March, April this year, to look into this. And they are already doing this for 2.5 years. So really, kudos, and it's amazing. And to be honest, I'm using you guys as well when I talk to bigger banks, like 10 times the size of you both together. They were always arguing, yeah, but you cannot foresee a hype. Well, yes, you can. Someone did. No, really, well done. And I'm not saying this because I'm here at Raiffeisen and waiting for a nice lunch later. Really, congrats. In general, it's, let's say, the consortium is always, it's always a question for a bank how to do it. I mean, there are various ways. You can issue your own stablecoin. You can issue a stablecoin as a white label solution, Fireblocks or CPN, what have you. There's a circle. You can join a consortium, or you can also basically do the wait and see approach. Yeah? or in the middle, you can also have, just, let's say, wallet and accept other stable coins. So there are various ways how to do it. And to close the consortium part, I would say for you, but also for banks that are a little bit bigger than you or also smaller than you, the consortium is definitely worth looking at as an option because it definitely has direct synergy effects in the consortium itself. Yeah. So for all of you that are in banks or even PSPs or big techs, think of consortiums, definitely, yeah, when you look at the entire option space.
Just to build on this, because I think it's important, you know, on one side, we are not dependent on the processes that go in every individual banks, so how they plan to build products and services based on stablecoins. But of course, on the other side, it's kind of, you know, a trendsetter, something that an entity that can share the insights from the industry, that can share some blueprints, how these things are actually done. So this communication actually goes both ways.
And since it's going to act like an independent issuer, how do you see the coexistence with Circle, Allunity, or other initiatives that also promote denominated euro stablecoins?
I'm happy to take that. I mean, it's a competition, right? It's a free market. I think there's, in the European space, you know, there's a reason why we haven't had a strong European stablecoin for a while, and I think, you know, part of that's MiCA, part of that is, you know, regulatory conversations. But I think, again, in this particular setup, in the European ecosystem of you know, where we are in terms of that whole space of regulatory and regulation and regulators, including ECB, for example, I think this particular setup has probably a slightly better chance, I would say, than a smaller setup that is either launched and issued by a non-European entity, or one that's issued by a European entity, which you know, maybe a smaller fintech, because there's just a different level of access to all kinds of people, but also there's a different level of systemic risk, if you like.
Yeah, go ahead.
No, I just wanted to add on top of this that, of course, it's very likely that there will be a future in which there will only be stablecoin more known as USDT or like USDC, stablecoin consortium or whatever else, even for what we're seeing in the market. Think about, for example, Plasma. So layers that actually are just meant for stablecoin. The thing is, each one of them potentially, I mean, first thing first, market is a free market, so there would be many different stablecoins. Second, it may happen, we will arrive at a point in which, of course, from, I don't know, 1,000 stablecoin, we will get back to 200, 300 stablecoin, and maybe each one of them will be used from different use cases. As of now, you see stablecoin mostly used for trading, but we actually envision a future in which it can be used from everyone. Just think about the evolution of digital identity. I was talking about digital identity just yesterday, and the point over there is we're evolving from having one means of payment, or maybe a couple, that can be our cards or our smartphone, through a third one that would be embedded within our smartphone, but that would be our digital identity to core. So it can be my name, my driving license, but it can be even all my banking IDs, including stable coins or digital euro. So it's an ever-evolving ecosystem. I think the best one we will thrive, but there will be even a world in which stablecoin will be used for different use cases, maybe aggregated into some specific means of payment, but yeah, with different use cases.
Yeah, I think the identity angle is very interesting. I was just reading yesterday that MasterCard, Humanity, and Moongate are now partnering together to work on this direction of uniting the digital identity side and stablecoins. Yeah. That's a whole other conversation.
Other topic. But
yeah.
Again, we're proud to say that either us as Banca Sella, either RBI, we're just like trying to make sure to be ahead of time on the topic that will happen in 2027. So
yeah, you want to say?
Coming back to the question about competition, I think that we're coming to a new generation of stablecoins, because how Tether, how Circle started, they issued a stablecoin and found a distribution network, starting with crypto exchanges, of course. Now what we see, especially also with the Stripe announcement as a stablecoin as a service, or also our consortium, we have the distribution channels, right? And we're building the stablecoin now. So here we're coming from a different perspective, and we have seen also with this first generation of stablecoins that distribution costs are expensive, and that you split a lot of revenue with the crypto exchanges, with the distribution parties. So we have these potential distribution channels, but of course we also have to unlock them.
Yeah, so this approach reminds me also to the approach that Revolut has been doing, for example. So instead of coming from no distribution and building a stablecoin purposed neobank, you're like Revolut, you own distribution, and then from there you start integrating stablecoin as soon as they accepted MiCA. Awesome. You want?
Yeah, just wanted to add something, because you mentioned the digital identity as well. Actually, when we look at the client perspective, and we are all here to serve our client somehow, and when a client is looking towards RBI, hey, can you please facilitate my payment? That's it. Yeah, they're not interested how they do it or where they do it. It's as a stablecoin, fiat. For them, fiat is a car anyway. Yeah, so they're not interested in that. And I was lately talking to one of my clients at Ripple, and he basically told me, and this shows how everything comes together. He told me, we are building our tokenization tool already for AI agents and digital identity. So I was like, what, why, now already? Okay, interesting, tell me more. And he said, well, imagine you go to, I don't know, a restaurant as a client or as a normal human being. You like the wine, and you go to your agent that maybe sits around your neck in 2 or 3 years. Hey, I like the wine, can I invest in the wine? And then the agent might come up with a tokenized version of the wine that partly already exists already, by the way. And then the AI agent asks you, okay, do you give me the consent to buy this particular tokenized wine into your wallet? You say, you say, yes, of course, yeah, please buy it. And how does it work then? The agent knows who you are because it has your identity, sitting on a chain or just linked with your agent. And then the agent might take some stable coins and send it directly to the current owner of the tokenized wine. And then with a millisecond, or with a couple of seconds over dinner, you can buy in with your agent this this wine that you want to invest in. And this goes on with many other use cases, of course. I mean, it's just an illustration how crazy a future from now in a couple of years might be, that you ask your agent. But the agent, and that's the point, the digital agent, the AI agent needs your digital identity, needs some stable coins, needs to connect with your wallet in order to perform whatever you as a client want in the digital future.
Yeah, awesome example, and I think the biggest issue there will be, of course, like safety and cybersecurity. How do you deal that you just trust your agent, and if by any chance the agent gets hacked, your life gets hacked, which I think probably throughout the lunch and so on could be a good insight for people to start brainstorming on that as well. But now that we talked more about concrete initiatives like the consortium, I would like to take a step back and look really into the everyday bank and how a bank could actually start approaching stablecoins. So maybe I'll start with you, Filippo. Which bank functions do you think that feel the most pain today?
Very broad question, but interesting one at the same time, because the point is, when it comes to, I think I can speak for Banca Sella, but I think it's very common for everyone that is working for a bank and moreover is working innovation within a bank. You know that when it comes to innovation, the first thing that they do is they laugh at you, at the very beginning, because they say, okay, but what's this new crazy thing that you want to bring at the stake? So I remember that back in the days that actually they were not laughing. All the people were very interested, but talking in 2021 about Bitcoin, Ethereum, stablecoin, potential digital identity. And back in the days, digital identity is not the one that we know now. It's not a European digital identity wallet coming in 2027. We're talking about self-sovereign identity. So I'm talking, I have a wallet. Within that wallet, I have NFTs. And because these NFTs are art, maybe they can say that I'm interested in art. Or I have soul-bound token. What's this soul-bound token? So the very thing is, you have some natural friction when you have something that traditionally has been working in the same way for many years. Why should I integrate something different? The good thing is the response. So in this very case, for example, for us, we did a lot of education internally. We produced two manuals. We had for a mandatory education for more than 2,000 people internally. We saw, of course, some more, I would say, affected, departments, as, for example, I don't know, digital channels, home banking, trading on a side, because trading now, through the new regulations, of course, even trading may be affected because you can have the opportunity to offer something different to the final clients. But still, it's an open point, it's an open topic. On this, considering so, therefore, all of this, and even adding on top some other that may come at a later stage. So, for example, the consortium is opening up for us not only discussion as a bank, so as Banca Sella, as the retail bank, but as the whole group. Banca Sella is part of a group of 20 companies. So it opens up to the PSPs, so to Fabric, to the IT company, Centrico, that actually had to deal with this innovation. So I would say that is a never-evolving opportunity for the bank and for all the departments to be aligned to this new wave of innovation that is coming.
But do you see, and I open the question to everyone, do you see some concrete areas like settlement, reconciliation, that actually can benefit from stablecoins, even though you don't know yet how you're going to implement it, but you say, okay, I recognize we have an issue, let's start brainstorming what we can do about this?
Yeah. I don't see, again, I don't see exactly one specific one, but like I would say a broader one. So for example, if I have to say everything that comes and goes around on banking, in our personal perspective, for what we are working on, will be affected. And so on banking, it means, as I was mentioning, settlements, it means trading, it means the UX, UI, the digital channel. So everyone that will need to be involved into this biggest, I would say, evolution that is brought from digital assets.
Any other thoughts?
Yeah, I mean, I would say in the broad areas, it's definitely payments and capital markets. So especially when it comes to cross-border payments, and this is something that we can see also fintechs doing really well, especially with the stablecoin sandwich, that payments can get faster.
Can you explain stablecoin sandwich in case someone doesn't know it?
Yeah, sure. So currently, a lot of these cross-border payments go through the SWIFT network, and there are often a lot of cross-border correspondent banks involved in there, which makes the process slow, expensive, because also every bank takes a fee, and often untransparent, because sometimes a payment is stuck with a single bank and nobody knows actually where it is, or at least the client doesn't know where it is. And what we see with fintechs now is that they are bridging, so they have the local entities with the licenses and connected to the local payment systems, but this cross-border payment part is actually done with stablecoins. Which is faster and cheaper and also more transparent. So the payments also to some exotic corridors can be done in, I don't know, a couple of minutes instead of a couple of days. And we do see that fintechs are doing this really well. So I do see also that banks should start exploring this if they haven't yet. And the second area is definitely also the settlement of tokenized assets. I mean, we believe that more and more assets will be tokenized, and you need a cash-like on blockchain in order to settle these assets and to ensure the true DVP there. And I think that stablecoins are, let's say, one of the most tangible products that can perform this currently.
Perhaps one more challenging question to everyone. If you could redesign one workflow with stablecoins, which would you pick and why? Of course, within a bank. I said challenging.
Yeah, it's a $1 million question. I actually recall that when you sent us this question, I was like, well, too many. And potentially, I have to admit that, for example, one thing that, then I will answer your question, I promise. One challenge, for example, we find within a bank is that being part of innovation, we used to look at innovation, but not at the traditional operations. So therefore, if we need to understand how to, I would say not modify, but like make it 10 times faster, something, we need to exactly understand how things works. One thing that when it comes to stablecoin, I think it can be of real help is the internal reconciliation. So not just talking about the interaction with the final customers, but all the reconciliation that should be internally within the bank itself and within the different companies of the group itself. Because as of now, if we have a PSP that is maybe processing the payments on the final point of sales, but these are connected, maybe they have accounts in Banca Sella, you have to find a way that, as of now, it's not directly automated. You can do it through a system that, of course, it doesn't account only stable coins, but even smart contract and everything that comes and goes around the DLT broader ecosystem that can ease that part and make it like 10 times faster, but even, I would say, way cost effective, generally speaking.
Again, I think it's not just about the current opportunities. So definitely we can redesign the current flows and use stablecoins in the same process how we're using traditional payments right now. But I think it's what's even more important are the opportunities there that we have, and there are opportunities like programmable payments, split payments, also kind of connecting the payment and the investment part, because what I could imagine in the future when a company gets a payment to their wallet with stablecoins, these stablecoins are immediately reinvested in some tokenized money market funds, and everything becomes very fluid. Everything is programmed according to the customer needs. Of course, there have to be risk controls in place and everything, but I think that this is actually the vision that we're working towards.
And now, let's say that the bank has the willingness to start exploring stablecoins. I would like to talk a little bit more around the use cases and actually how a bank can start proceeding internally around it. So I'll start maybe a question to you, Bernhard, on how should a bank evaluate stablecoin purpose neobanks? So are they more of a competitor in terms of distribution? Are they a good partner for experimentation?
I would even go one step back. The competition is not the neobanks against banks. The competition is actually that's happening between the banks, the, let's say, crypto players like Theta and Circle, and what we haven't mentioned today is the big techs. So as some of you might know, WhatsApp is in a partnership with one of the big crypto players, meaning that they're also working on a stablecoin, meaning that when I go for lunch with someone, I set up the meeting for the lunch for lunchtime over WhatsApp. I owe him after lunch $20. I transferred the $20 from my WhatsApp wallet in his WhatsApp wallet. So this might be the challenge that we are facing. Yeah, I come back to a question now. How
yeah, but it's a good point because it opens an even broader overview of how many players are actually competing.
Also Amazon and Meta is working on this, Amazon is working on this, Apple is working on this, and the amount of revenues that the big techs are having now with financial institutions or have financial institution services is huge. I mean, we all need to take out our iPhone and click on the right-hand side. I mean, Apple is getting money from this, of course. So it's already touching the double-digit percentage points for the big techs in general, coming out of the financial service industry.
And do you see that? Go. Do you see that banks are taking this into account already, or right now are they trying more to think about within their own reality what they can do and how they can implement stablecoins, or are they looking at different partners around?
I mean, first you need to look in your own ecosystem anyway. You cannot start, for the very first project minute, we compete with Amazon. Yeah, that's a little bit too far-fetched. But you were asking before how I see banks start to think about stablecoins. Again, they normally see this entire option space that I laid out before, from doing nothing at all to join a consortium, to have a white label solution, to have a crypto network, CPN, Fireblocks, others, to issue your own stablecoin that you do yourself. Yeah? So on this option space, the question is what to do. And banks are always approaching this, often with our help, in looking at use cases, and use cases are directly linked with volumes and with clients and with locations, because in the European Union, or in Europe in general, especially after beginning of October, we have the instant payment anyway, so it's a different argumentation that you have in Europe compared to even US or other places in the world. Or it's also a different story whether you whether you are in a region where everyone is using stable coins already, be it Turkey, be it Argentina, or also be it Dubai, especially for a cross-border transaction outside of Middle East. So location also matters. And then you have, let's say, a multi-dimensional cube of locations, of products, of clients, of volumes that you need to kind of work and fill out, and then you answer the question of the option space that I laid out before.
Filippo, did you want to add something?
Yeah, no, I was just thinking on the fact that there will be companies, as for example, Meta, no? They're creating product and stablecoin that may affect directly their target in their most commonly everyday life. So for example, Bernhard was doing the example, I'm going to restaurants, I'm paid through the stablecoin. As a bank, of course, the target, the bank has thought itself to solve most of everything that comes and goes around payment, that comes and goes around custody, if I'm talking about not only on custody and digital asset, but custody broadly speaking, even of fiat. So there will be a time in which, again, as I was mentioning before, many different stablecoin for many different companies for potentially the same use cases. At the same time, there will be, those stablecoins will be, some will win, some will lose, it may say, or maybe incorporated into others. Banks should always have in mind that they're going to create a product that would affect their targets, their final users, on multiple use cases. And therefore, even the MVP of the use cases, they may start with something that can be for remittances or for cross-border payments, but at the end of the day, they're meant for everything in our daily life.
Yeah, and maybe one question more on the internal rollout itself. So when we consider a rollout inside the bank itself, whether it's the bank issuing a stablecoin or whether it's a bank just facilitating the distribution, how do you see the change management impacted within the bank itself? Because of course, we're talking a lot about programmability, automation, which of course impacts roles and jobs, and is the same thing that's happening with AI, right? What kind of decision do I make? Do I want to keep the people and the market stable, or do I want to bring in innovation? Have you had this type of conversation already inside the bank, or how do you approach it? Question to everyone.
I can fully relate what Filippo said before, that first time when you come with some ideas there, they laugh at you. Or
Yeah.
at least they listen to you, but there are usually no questions or no particular interest. I have to say that this has changed, especially this year. I think that after the change in the US administration and them saying that they want to be the digital asset leader globally, we also are starting to feel some pressure. On the other side, there's also market pressure with fintechs offering better and better services with stablecoins. And there will come a time when also our customers will start to ask, can you offer a stablecoin wallet for me? Can I do payments with stablecoin? And I think that this is also kind of the wake-up call for a lot of the banks, because a lot of the banks are working in this customer-centric mode. And of course, the opinion of the customer matters, but sometimes you shouldn't wait for that moment to happen, but you should start before.
So it's kind of the chicken and egg thing, that problem solution. Are you first mover? Are you waiting for someone to tell you that they actually want it? You want to say?
Also to jump in, I think, or my experience is, it needs education within the bank, and education is basic. I mean, this is clear. The managers are dealing with HR topics, then they're dealing with I don't know, a product rollout in a new region, and then they're dealing with innovation. Yeah. So
Yeah.
of course they need some education, some seminars beforehand, because otherwise you get questions in boardrooms like, isn't this for money laundering, or isn't this bad for nature because it takes a lot of mining energy and then stuff like this. So you get a lot of weird questions where like, okay, yes, partly true and partly of course not, and so on. But it needs a lot of education first, and then you have a possibility to roll out the new product in the bank, because, and you can definitely agree to this, I guess, it needs a broader consensus in the bank, because the business lines need to work with this, and in the future you have compliance that looks over it, you have risk that looks over it. So basically you need the entire bank to launch a new product anyway, so start with education first, and then it's just an easier discussion and a smoother discussion.
Thanks for giving me the hint, because I was thinking, so I'm doing a step back for the previous question,
Yeah.
and I was thinking exactly after Vid answer about one of the, I think that one of the most important departments is affected when it comes to DLT, to digital asset, this type of transformation, are compliance on one end and AML on the other hand. There was a lot of, especially in our case, a lot of education, and still ongoing, because you can do something internally, but at a certain point you have to bring to the stage even people that knows it better than you. Okay, so it can be whoever does, for example, on-chain analysis. And this was very helpful for us to bring more innovation, to make sure that innovation was accepted, and internally to accept the fact that innovation is something important, so to move forward. So yeah.
On top of that, what also helps is the conviction of higher management. So if there's, somebody saying, has the vision and conviction, this is something that will happen, we have to do something, everything is way easier.
So conviction from higher management, education, potential concrete use case, and regulatory clarity. Once we have this, we can start thinking more about implementing stablecoins. Awesome. I see that we have about 5 minutes before I would like to open the floor to some questions. So maybe it would be interesting now to step away from just the European side and looking also globally. So perhaps, Jan, a question to you. Do you see any parallel consortia that are looking at a US-dominated stablecoin, similar to what's happening in Europe?
Well, the US is an interesting market on the stablecoin side, because I think they're quite a lot further along the way. The US stablecoins make up about 99.8% of the volume at the moment, but it's also a hugely fragmented market once you get beyond the top 5, if you like, right? But it's also a huge, I think a lot of players see it as a gigantic market opportunity. So there's definitely other consortia out there. There's also sort of bank and non-bank consortia, which is also interesting. So there's definitely a lot going on in that space, but I still think there's a huge opportunity for a euro-backed stablecoin, because if you just think about the differential in flows, if you look at the fiat flows globally, you probably around about 20-25% on most measures, right? If you talk about reserves held or cross-border flows, you have 20-25% in euro versus other currencies. Whereas on the stablecoin, you have about 0.2% of stablecoin flows are in euros. So there's a gigantic sort of mismatch there, which creates quite a big opportunity, I think, especially now. It's not going to be a winner-take-all market, I don't think. I think we'll probably see similar market dynamics, but there will be definitely there's room for 2 or 3 large European stablecoins that will make a real difference.
This will definitely change in my view. First of all, the US stablecoin dominance is from Fed and Circle. More than 90% is used for crypto trading, safe haven crypto, DeFi plays, and so on. And only, let's say, the remaining 8 to 10% were used in the past for cross-border transaction. So when we go away from the, let's say, crypto-only plays to, let's say, more traditional banking plays, then this will directly change. And second point, now are the big banks and big logos, so to say, jumping on the topic, and they have different client bases anyway in Europe, in Asia, and everywhere. And as a European, if you're not in crypto trading, you directly ask for, okay, you have a euro exposure, why should I have a US dollar exposure then in the future? So this will come automatically. The question is, nevertheless, how fast this will be. But the new stable coins will enter the market mid-next year, end next year in Europe as well. And then you will have a slow increase up to the percentage points that we see with fiat as well, so the 10 to 20% or so, my guess.
One final question. If we were to take some lessons from stablecoin summer, everything that has been happening over the last months around stablecoins, what kind of lessons can we bring forward to 2026? Everyone.
I think that stablecoins are one of the first kind of product market fits after Bitcoin that kind of also brings banks closer to the crypto space. And I'm super excited that actually this gap between the banking and crypto is slowly closing. So I think that stablecoins are actually also a vehicle to support banks slowly entering into the crypto space.
I think it's interesting because it demonstrates, I think, one of the impacts of more institutional involvement in the crypto space is basically, I think you don't have the same speed of hype bubbles growing and bursting. And I think this is one of those, I'm going to call it a hype bubble, but it's sort of crypto hype, if you like, because there's a lot of noise around stablecoins. But I don't think it's one that's going to pop the way the NFT sort of craze popped, because there's a real utility here and a real.
And connecting to what Jan was saying, I think it's the best touch point, for the final customers, especially when it comes to bank, because you're not offering something crazy, you're not offering like crazy return, you're offering something that is stable, that is pegged to your very money, but that can be used to something more. So the first thing that I'm bringing from the stablecoin summer, as you call it, is the fact that there will be opportunity to offer something similar to what we already offered, but in another way that could be faster, cheaper, and for open up to the broader ecosystem.
Feels like a final round already.
Yeah.
So I would have 3 points. So have a strategy around stablecoins because they are coming. It could be an offensive play, it could be a defensive play, it could be one of the options that I just laid out before, but have a strategy. Then second, think of use cases first and who you are, who are your clients, who are your regions and so on. And third, don't underestimate the big techs. It will be especially a big tech play. They are faster, they are quicker, and they have the wallets here already. Yeah, so don't underestimate them.
Thank you. I will open the floor to 1 or 2 questions.